Do you want to cover a debt or some other costs with life insurance for maybe a specific period of time, but you don't want to lose the money like you would with a term policy where you never get that cash back? Well, by the end of this video, you're going to have an understanding of a different option that might be available to you that has some really unique features. My name is Jake Williams, and I'm a life insurance specialist with Step Up Wealth Management. For more information on life insurance and how it can fit into an overall comprehensive financial plan, be sure to subscribe to my channel and hit the notification bell. That way you find out immediately whenever I upload new videos. So what I'm talking about is a return of premium term life insurance policy. Not everywhere offers these, but if you can find one, it could be something that could fill a role in your financial plan that can really open up some windows for you. So it is a term life insurance policy. So it's written for a specific period of time, typically 20 to 30 years. And unlike a traditional term policy where you pay the premiums and then at the end of the term it's done, at the end of the term with a return of premium policy, you get a couple options. You can typically look into some sort of a paid up permanent policy, or what a lot of people will do with this return of premium policy is they will take a payout. So what the company does is they'll write you a check for the amount of premium that you paid them over that time period. So if you're paying, let's just say $1,000 a year on policy, just to give a nice round number, $1,000 a year over a 30-year policy, they'll write you a check. Now you're probably not going to see the full $30,000 back, and here's why. They're going to take out some expenses out of this policy, but you're still going to get a significant portion of that money back. You will pay more in premiums while the policy is in force for that option, but it can definitely be worth it if you are able to get that cash back. So really, some people may not like the fact that you don't get the full amount back, but I would pose the question, would you rather get 75, 80% of your money back after the term of coverage, or would you rather get 0% of your money back after the term of coverage? That's up to you, but I know which one I would choose. So there are some drawbacks on this. It is a higher premium than a straight term policy of a comparable death benefit. So you would have to be able to afford that upfront cost. But if you can afford the upfront cost and you can pay the increased premiums, not increasing, but the higher premium. It's going to be a level premium just like a standard term, but it will be a higher premium cost than a term policy. If you can afford that higher cost, it gives you flexibility at the end of the term where you can either get more coverage or get your money back. So it's a really interesting option. Not every insurance provider offers a return of premium policy, but some do. If it's something that interests you, talk to a professional, find out where and how much would be right for you. If you have some questions on return of premium policies, or you've heard of some other types of policies or other riders that may be able to help you in similar circumstances, drop me a comment down below. I'd love to hear what kind of questions you have and see if maybe I could turn that into a future video. If you liked the information, give me a thumbs up. Let me know you like what I'm doing. And most importantly, if you want to sit down and talk about if this policy could be right for you, there's a link in the description below where you can apply to become my client. Short masterclass, a couple little fact-finding questions, and then we'll schedule a time to meet. Check it out. Let me know what you think. I'd love to hear from you guys. I'd love to sit down and meet with you. And please take care of your now, your future, and beyond.